Well, good morning. Welcome back here to Trader Minute. Great to have you aboard. We chatted last time about an hour and a half before the market closed yesterday, and a lot has happened, since then in a span of 2.5 hours of market trading. Yesterday into the close, saw a big rip again in stocks, and then this morning. Started off on the weak side, started to see some selling, and then we saw a pretty incredible candle. And let me zoom in here on S&P futures. But from 30.56 up to 31.27, almost a 70-point candle. Incredible. Just incredible. What's going on? Well, the Fed cut rates. They came out. They cut the interest rate. I had made the comment this morning that market's starting to price that in, and that's what we saw yesterday. But they came this morning and said, "Boom, here we go." Cut the rate, and are willing to cut it more depending on how the coronavirus stuff all shakes out. We saw the banks weaker this morning on the open. And what was interesting, if you look at something like a JP Morgan, it was weak on the opening, massive uptick. Since the rate cut, pulling on back as the rate cut worries of yield curve flattening, continuation here. So we see the same action with Bank of America, many of the other banks going on out there. But, outside of the banks, if we just look at the overall market, 70-point upward candle, and then followed by, 15 minutes here where we have a pullback of 60 points on the S&P, followed by a 40-point rally. The movement here is pretty incredible. It's just one where there's only a few times in history where we've seen this much movement, this fast, this often, and most of those times we have seen stocks go significantly lower. And so, I don't want to get on here and be bearish and all of that. I'd like to call it as I see it and as they are. But with everything that we're seeing, it just is one of those where history is on the side of further lower for equities. And we can see big bounces in these kind of more bearish toned environments like what we see the metrics in. And this is where we see some of the biggest bounces. And that's what we're seeing here. And so I would not be surprised. I would not put the market past another 100-point rally today. I would not put it past getting all the way down to 3,000 on S&P futures today. I think both of those come into play, here on the market today. Let's take a look at a few things. Let's start with the challenge. The challenge still in all cash, and we are seeing some crossover action come into play here today. Apple, Dollar General, FXI, Twitter, Verizon, Walmart, Netflix on this list as it had its crossover yesterday, but yesterday kind of into the close with the big closing action. But here's Apple. 3-7 crossover. We talked about these types of charts. We're probably not going to get signals on the initial crossover. We need some sort of high or low to come on in. We're not seeing a signal here for Apple. One that I mentioned could be different is Netflix. Now, Netflix is one that had its crossover yesterday into the close. And I thought, this might trigger. We might get a signal here this morning because when we get the crossover in that last hour, we oftentimes will see the signal come in the morning. And it just doesn't happen very often. But in the case of Netflix, that's what's going on. But it is not a signal. And I was a little surprised to see that. Consolidation risk on it is very high. And I didn't think it would be. So I'm going to go and dig in just a little bit more. But, regardless here, no signal to trade here on it yet. And then Alibaba, which is the one I expect to, potentially create a signal. This is missing its 3-7 crossover here. So, still some chances with those. We have other upside crossovers, Dollar General, FXI, Twitter, Verizon. Most of these are in a similar position to where they've moved more than two average true ranges to get these crossovers. Plus, they're dealing with downward sloping 20-day moving averages. And so something like Verizon's a little more close to triggering something bearish than bullish right here. And a lot of these upside crossovers, they're going to need that higher low to come in. And we'll see. We'll see how it all plays out. So, I hate being in all cash here. We haven't seen the market internals change to where the market vibe has gone bullish. Even with the upside, rally action, we are seeing the bullish percent index move up a little bit today, just slightly here this morning, but we're not seeing a massive change in the internals out there in the market right now. So those are the crossovers. The challenge, still in cash, and we'll be patient, here accordingly with the signals. Now, rate cut, Fed rate cut here today. Something that we do not see the Fed do very often, where they come out and do an emergency rate cut. And that's what they did. We saw it out of Australia. We may see it out of some other central banks where they come in and do an emergency rate cut. I want to go back in time a little. Here's 2007. This is a time where the market was setting new highs. And we were dealing with, new highs. There was this worry of subprime, being thrown about. But in 2007, subprime had been talked about now for 3, 4, 5 years. It was one of those things where, when we look back in history, subprime, that's a big deal. That's why the market went down. But all the subprime talk and all the subprime worries were with the market as it continued to go up and as it set new highs. Then we see some of those worries really start to hit. We see some of the bank earnings and where kind of some of that subprime is at. We see the market, fall off. And this was a big dip for the market at the time. S&P going from 120 down to 111. So not quite a 10% move, but about an 8% move. A pretty massive move for the markets. And you can see some of the bounces that it had along the way. Went in 2 days here from 112 up to 116. So we're talking about a 3% rally here on it. And you put that into context of today's market. Today's market's significantly more volatile than this. And this was one of the more volatile periods. And then we had another shot down. And then take a look at this rip here on the market. And I have a dotted line going through the middle candle. That middle candle was the Fed cutting rates. Now, it wasn't a surprise rate cut. It was an unexpected rate cut, but it was with a Fed meeting that went on. And, there was speculation the day before, hey, the Fed may change their mind. They may cut rates. Then they come out and cut rates. Market rallies. The next day, the market rallies again. All's going to be good, right? Everything's great, grand, wonderful on this bounce. The Fed has fixed it. The Fed is alert. They're on top of things. They know what they're doing. Jim Cramer no longer has to go on a rant that the Fed knows nothing. If you remember this time period, one of his famous rants. And then, boom. Big drop. Big drop. This was subprime. This was economic concerns here. Right now we have a different story, a different narrative. We have coronavirus and the fear of a pandemic, affecting the global economy, and how does it ultimately affect it, and how does it, play on out here for the global economy. But my point in showing this is to show that these types of monster rips, where we get this huge dip like what we had last week, to get a monster rip in it is common, not uncommon. And we've talked about it from day one of this, drop. Predicting where and when and all of that and everything else can kind of be a little goofy, but very common to see this type of action. And what's even more common is to see some sort of retest of the lows ultimately come into play. So just keep that in mind as you're kind of going about things. As far as the challenge goes, I'll just be looking for the signals to come in, trading the signals, and go. We'll keep with that. I was asked yesterday what I'm doing during this time period from a trade standpoint here in the market, and it was uh, very well. Excuse me. I apologize. Sorry. Somebody walked in and is asking me a question, so I apologize. I'm gonna pause this for give me 10 seconds. All right. My apologies there. Lost my train of thought. But yesterday was asked what I'm doing at this time in the market right now. And what am I doing? I'm day trading. Now, I'm not doing 50 trades a day. Yesterday, I made 4 trades. And I'm day trading, and I'm using the methods that I showed over the end of year holiday with the minute chart and the MACD and the Bollinger Bands, and just using that technique that we showed and taught, at that time. It's working phenomenally well with so much movement in the market. There's plenty of follow through, but I did something yesterday. I day traded yesterday, and I had 4 nice winners. I went 4 for 4. Okay, great. I don't do that very often, but was fortunate, was lucky enough to go 4 for 4 yesterday, and didn't make anything monumental. I don't put huge risk in day trading or anything like that. But what I did is I took all the gains and I bought a SPY put, a put SPY put spread, betting on a retest of the lows. And I said this. I said, all right, I'll take those gains and I'll wrap that up and put it on some sort of bet to the low side here. And if it works out, great, home run. If not, I really haven't lost anything except for my day's gains on day trading, and for me it is an all or nothing type of thing. I know most traders, don't appreciate that or can't stand that, but for me that's what I like to do, and that's what I've done. I have not day traded at all this morning. I didn't get a signal, upside downside. Haven't had any signals here yet. We'll see what the market kind of does here this afternoon, and if anything sets up. But just been day trading the SPY, kind of watching some of the action, letting some of the stuff play out, and seeing where some of the potential signals might lie, as we go forward, and looking to ultimately be able to react to those going forward. I do think the action today on the U.S. dollar is compelling. It is helping to drive gold back higher. You can see gold having one of its best days that gold has had in a long time. It had one of its worst days in a long time on Friday, and today it is essentially raced all of Friday's action. Bring some of the gold miners like GOLD, very interesting 3 white soldiers candle pattern right here. But we have a lot of this going on, and a lot of this, big drop, big chop, big pop type of stuff. And so far, the Bulls don't have anything to run from. The volatility, the bounce is in play. We're seeing it go into retracement areas, but we have not seen any sort of topping action for this move. And while I'm looking for that, topping action to potentially come in. You'll remember this move right here. I was looking for the topping action to come in, for some sort of bounce to come in. Ultimately, that bounce turned into what? Turned into continued rally. Gave us a chance to play some challenge trades as they triggered on the upside and went after them. So it's one where, yeah, I am looking for kind of a retracement bounce in this 312 to 320 area on the S&P. But should this turn into more and be ready to go to the upside, I will react to it as the signals come into play. But so far, nothing's there. Nothing's there for me to react to. But if you're interested or you want to go out and day trade with something that's really working well right now, just go and Google search, or not Google search. Go into the Trader Minute archive, search day trade, and that video from the end of last year will come up on top. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you this afternoon. Take care.